I think we will start now.
Yes, sir. Yes, sir. Yes.
I'm again going back into the basics of Heikenashi method.
Okay, sir. Okay, sir.
And after that, anybody who has any questions can pipe up and ask the questions. The first thing we do when we use the Heikenashi method is we mark a line at the opening price of the day. See, I am not yet fully ready for this. The reason we mark this line at the opening price of the day is to find out whether price action is trading above or below the open price. If it is trading above the open price, obviously it means that it's forming a green candle and we are supposed to look for a buy trade. Or in options terms, we are supposed to buy a call option. If price action is trading below the open price, we look for a put option or a sell trade. If you're trading stocks, you take a sell trade. Where did I mute myself? Everybody able to hear me?
Yes, sir.
Yes, sir.
I am muted on WebEx.
Okay, fine. I was thinking, what did I do?
Actually, your voice is echoing, so I am muted on WebEx.
That means you are able to hear it there also.
I am able to hear you.
No, on WebEx I'm saying.
Yes.
Oh, that's nice. Okay, coming back, what we do is we identify a couple of strike prices for our trade for the day based on what the price action is doing at the current day. In the current day, if the price action is trading above the open price, we look for a call option buy. Or if you're trading stocks, you look to buy the stock. If the price is trading below the open price, you look for a put option, or if you try to short the stock. This is the sum and substance of this method. Then the next question is, where do I enter the trade? Heikenashi method is not a magical method. It is a method which enables you to enter the trade at the lowest possible price with the least amount as stop loss. That's all it does. Otherwise, the principles of trading like buying in an uptrend or selling in a downtrend will apply. So let us select some strike prices. We'll take 34,000 and 35,000 CE. To enter into a, to enter into a trade with our Heikenashi method, what we do is we put the CE and PE in two charts. Zerodha has this multiple charts feature which we use. 34,000 PE and 35,000 CE. This opens up in a new tab. And we shift our time frame to 15 minutes and the display to Heikenashi. Now in our Heikenashi method, we have some rules. We never sell against a red Heikenashi candle or never buy against a green Heikenashi candle. So whenever we see a red candle, we automatically think in terms of buying. And whenever we see a green candle, we think in terms of selling. This is a fundamental aspect of the Heikenashi method. What we are basically trying to do is to catch a pullback and then enter on the pullback being over. And if the pullback is over and the trend continues higher, we make money. Then the downtrend resumes, like what we saw on Friday. in these cases, how do we avoid entering into the trade? Is another question which keeps on coming up. But we'll deal with that as we go along. The initial rules are never sell against a red candle. Think only of buying. So when do we buy? We buy when the Heikenashi red candle is formed and the normal candle breaks the high of the red candle, high of the Heikenashi candle's timing. Sorry, I screwed up on this. This is the timing of this is 11:45. So 11:45 candle high, when it is broken, we enter a trade. Sometimes it goes into a reversal of the trend and gives you good money. Sometimes it's just a pullback which falls back to the original trend and you lose money. What we do is when the market opens, we look to see whether the price action is trading above the open or below the open. Here the price action is trading above the open, that's why a green candle is formed. So we look for entry in the CE chart. We ignore the PE chart. So we look at the right side of this tab and wait for an entry into the call option trade. And we get an entry into the call option trade pretty late in the day actually. After the Heikenashi forms a red candle, this is when we are supposed to buy. We are not supposed to buy when we are having a Heikenashi green candle. So this was at around 1:15, you got an entry into a buy trade. So on the break of the high of this candle, you enter your trade. And then let the trade run with the stop loss at the low of this entry candle. Now it so happened that the stop loss is slightly larger than usual because you had a situation of continuous uptrend in the morning itself, and then the price pulled back, and after the pullback you are entering the trade. So you have a 30-point stop loss on the Banknifty trade. Many times you will find that your stop loss is 10 or 15 points. That also could happen. But Friday was a different kind of a day. The momentum was totally bullish. And you were lucky to get an entry into the trade. Seeing the full-bodied candle which formed on Friday, it was actually a lucky thing that we got an entry into this trade. And after you enter the trade, what do? You sit and do nothing until either the stop loss is hit or the profit target is hit. During the time you are in the trade, you are not going to look at whether I will get an entry in PE side or not. All those things will not concern you because this trade is running without hitting your stop loss. Let me mark the stop loss here also. This green candle is your entry candle. Low of this is the stop loss. High of this is the entry price. Shrenik, you're okay with this?
Yes, sir. Yes, sir. But one comment, sir, like how to set the strike price, sir? Like
yeah, we'll come to that.
Okay,
Shrenik.
okay.
I don't have any solution to offer to you regarding exits because many times I also fumbled at my exit. I decided I'll let my trade run till the end of the day. Either it gives me a very big move or it goes up and comes back down. So either way, I'm willing to accept the outcome. So in a nutshell, this is the trading system. There's nothing fancy we do. What we are basically trying to do is enter at a support level and let the trade run to various resistance levels. So the support and resistance can be marked using either There are many methods of marking support and resistance levels. For ease of use, we'll look at the pivot points. So you see that it has reached all the way up to this pivot level, this level down here. Right. All your pivot points of the earlier days also continue to act as support or resistance levels. And you will basically look at the price action to determine whether you should exit or not. If the price action is not forming a indecision candle or a red candle, you have no reason to exit the trade. Right? So you will wait until the price reaches to the next level of support or resistance. So this is how you keep tracking your price as you go along. Now on the put side, a lot of people said we took entry in puts here, etc., etc. Frankly, I was a bit concerned about that because when my daily candle is a strong bullish candle, there is no way I should think of entering a put option trade there. Otherwise, I'm trading counter trend, and the success rate of counter trend trades may be low. It might turn out to be just a pullback rather than a reversal. So please don't anticipate price reversals. If it happens later, you will get an opportunity to enter. But as long as you're not getting your stop loss hit on this trade, it means that the call option trade is alive and well. And you should not be looking at a put option trade at all. There are a few of my videos where I say take all the trades. Okay. When I say take all the trades, it means that you would have entered a put option trade here and you would have had a stop loss hit. That also is fine if you're willing to take that loss. But when you look at the higher time frame for your trend assessment, even if you take a 1 hour chart, at no point in time there was a reversal indicated, even on the 1 hour chart. Sorry. I'm looking at the spot chart here. So when I have bullish candles forming and then there is a small pullback and a red candle, people tend to get scared and get out of the trade. That's fine as long as you get back into the trade once you see another bullish momentum happening. Instead of doing this, I look at only the daily candle and look at whether there's a strength behind this candle or not. The strength of the candle is measured in terms of large body, small wicks. So when I didn't see any weakness on Friday, I wondered why people have taken a put option trade which was bound to be unsuccessful. The problem is not in taking this trade, this amount of small loss you could absorb. But the problem was in not getting back into the bullish momentum as it happened. I think many people got confused there. And that was the reason I was mentioning in the group, why don't you guys look at indicators if you want to be more comfortable on trading this. At least some indicator would have prevented you from taking a put option trade. If you're not very comfortable reading pure price action, then by all means use some indicator to show you the trend. Honestly, I don't use indicators, but I didn't see any other option but to ask the guys to use some indicator to stay within the trend. I think what we do is when our position sizes are high, we start taking a lot of emotional calls. We start shaking whenever we see a red candle forming. It's natural. when you put your money at stake there. So it's quite natural you'll feel nervous. But then again, you need to also know how to measure your trend and how to see whether the trend is continuing or not. And to see that, if indicator will help you to trade better, please go ahead and use the indicators. No, I'm no longer going to say don't use indicators, because honestly, I don't use it, but others may not be feeling as comfortable as me in doing this. Yeah. Now, as far as the strike selection is concerned, what I suggest normally to people is that there are two aspects in strike selection. One is the amount of risk you are willing to carry on your trade. The other is what kind of momentum do you want to see in your option trade. I don't mind having a slower momentum on my pricing, so I take a deep OTM option. And some people may feel that it's not moving at all and the movements are too small. So in which case you can take a closer strike price. Now, what I typically do is on Fridays I go 1,500 points away from ATM. And Mondays 1,000 points, Tuesdays 800 points, Wednesday is 500 points. And on Thursday, I split it into two sessions. One is the morning session where I trade about 300 points OTM. I close that trade by maximum 130. And after that, I play only the ATM straddle. The hero or zero trade, as you call it. This is just me. If you are more comfortable using a ATM strike price right from beginning, you can definitely feel free to do it. I don't like to keep too much of my money at risk because I trade the daily candle method, where I look at the daily trend and enter a trade quickly. In the morning, within the first 1 or 2 minutes, I enter my trade and leave it to go. I look at my trade only at the end of the day. It does cause a few losses, and to absorb those losses better, I take a very low strike price. Low premium strike price. I don't like to take a risk of more than, let's say, 60 rupees per option trade. So if I would have entered into this probably at around 60 rupees or 70 rupees, and I would have let the trade run, because my loss can only be that much. In case I'm wrong, I can only lose that much. The rest of the time, I don't look at the chart, I don't look at the intraday movements and get confused. To be honest, this is all there is to Heikenashi trading. Heikenashi is just a means of getting entry into a trade. When the pullback happens, the previous trend has ended, and after that you enter into a trade, and either you book your profit or you let it run and allow the stop loss to hit. So on days when you have a solid trending move, you tend to get a very good risk reward ratio on your trade. Sorry. The rules of our Heikenashi trading, again to repeat, is never buy against a green Heikenashi candle, never buy against a red Heikenashi, never sell against a red Heikenashi candle. These are two fundamental rules which you will never violate. And you only enter on a pullback or the end of a trend, and here this pullback is over when the Heikenashi candle at 115, I think it was. Yeah, the normal candle at that time, the high was broken. So we enter the trade only on the break of the high of the normal candle. Heikenashi is just a tool which tells you this is the right time for you to probably enter a trade. That's all it does. Other than that, Heikenashi has no special role to play. Just 1 second, guys. Will you please shut the door? Yeah, okay. Sorry. Any doubts from newcomers up till now?
Yes, sir, I had a doubt.
Mm.
Sir, could you display the chart, please, on the 15-minute one, on the call option?
Yeah.
Yeah, so once the red candles started to form,
Mm.
and how did you know, was it because of the wick, the doji formed?
No, actually,
the
when the red candle forms, I start placing my entry order at the top of the red candle, on the top of the normal candle at that time.
Okay.
See, the red candle is an indication that buying opportunity could be near.
Okay, so you would set the buying price not according to the Heikenashi, but according to the normal
According
candle.
to the normal candle. So
that
the
you
moment
would be
this red candle started forming, I start
Yeah.
placing a buy order above the high of this candle.
Okay.
Now this buy order did not get triggered.
Right.
So when the next candle forms, I place the order above the high of that next candle. Even that did not get triggered. So I keep on moving my entry order downwards.
Yeah.
So until at one time, the entry order gets triggered, which it did in the case of,
Yes,
here it
understood.
got triggered actually.
Yeah.
So as you see the red candles forming in Heikenashi, you start placing your entry order against the high of each candle. And wherever it gets triggered, there you have your trade.
Okay.
Hello.
Yeah.
Sir, we have to be basically in the Heikenashi candle only, sir. Every day, like call and put both we should be in a Heikenashi
Yes.
candle only.
Yes. Whenever you see a red candle, you start
Okay.
immediately thinking in terms of buying. So you will start looking at whether there's an entry opportunity in any of these high breaking points.
Okay.
So once you see that red candle has started forming, Heikenashi, because of its nature, being an average price of the candles,
Okay.
it will continue to form red candles. That's why it gives you a smooth trend.
Okay.
So the moment you see a red Heikenashi forming, immediately you move on to the normal candle and wait. Wait for the high to break. This high is not broken. 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 Until you finally find that there's a high which is broken.
Okay.
Then you are in the trade. After that, how you manage your trade depends on your risk perspective, your whether you want 1:1 risk reward or whether you want to take profit earlier, later, whatever.
Okay. So we should not buy whenever there's a green Heikenashi. Only
Correct. You should not buy when there's a green Heikenashi candle.
Okay. Only the red is there. We should buy. That's all.
Correct. Since we are option buyers,
Yeah.
we
Correct.
don't have anything to do with the green candles.
Correct. Okay. Okay, sir. Okay, sir.
Sir, in this scenario, when the opening price, I mean, the price started moving up and we knew that it trending upwards, why is the need to assess the P option also?
No, I normally keep both the strike prices ready because price could turn back and form a red candle at any time. No.
Okay.
Normally what
So
happens,
even if
we are
even if
looking at this thing at around 9:15 onwards, right? It could happen that it forms a green candle and then again a red candle forms and the price starts slipping back below the open price.
okay, okay.
It did not happen on Friday, but it could happen.
Sir, one more thing, sir. You said that like you will jump in the trade in the morning hours only.
Yeah.
How can we decide that that day could be trending, or because like 50 minutes that candle open?
We can't decide it will be trending. That is that's something which we don't even try to predict the market.
Correct, sir. Correct, sir.
Wherever the price moves, we move with that. That's the reason I said we'll take all the trades against both P and CE.
Okay.
Right? We don't know which side is going to trend and at what time.
No, sir. What you said is you will be looking on the daily chart, right? Sir?
Correct.
Okay, on 9:15 the day opens.
Yeah.
And it may move up also straight away. First
It went up straight away on Friday.
And it can come. It can come back also.
Yeah, it can come back also.
Yeah. Then at that time we'll take a stop loss, sir. Like how it is.
So what I do is you don't have to take a stop loss because you already have your stop loss in the system.
Okay.
Number one is this formed a green candle, let's say.
Correct, sir.
Right?
Yeah.
Heikenashi also was green, obviously.
Yeah.
This is a spot chart where you look at it only for the trend. If spot is showing a uptrend, you're going to buy a call option.
True, sir. True, sir.
When it reverses and forms a red candle,
Okay.
you wait for the price action to tell you that price has reversed. And normally when the price slips below the open price, that is the time at which I will look at a put option.
Okay.
Until that time, I won't do anything on my call option.
Okay.
This marker is meant to tell me whether I should take a put or a call option.
Okay. So above that price, you are buying the call. That's all. Below that, you are selling the put. That's all.
Correct. Not selling. I'm buying the put.
Buying the put. Sorry.
Yeah.
Okay.
Sir, here stop loss is entry candle low.
Entry candle low. That is very clear in all our methods. Entry candle, if it is this, 375 entry, 350 stop loss.
Sir.
Normally what I do is, I look for very small candles to form, which tells me that the momentum is slowing down. If the momentum is large, I will not take entry against that candle. So I have a rule for myself that if my stop loss is more than 20% of the entry price, I don't enter the trade. It may make me miss a few trades, but that's better than losing.
Sir, on P side, can you please show the chart, sir? We had an entry on, I think, 11 of that red candle. Sir.
Correct. You had an entry.
Yeah, above that red candle high, no, sir. Above that.
Yes.
High of 375.
Correct.
We can take an entry, sir. There also, no, sir.
Yeah, you would have taken an entry, right? If you were not quick enough to exit, and you waited for the price to move higher, then suddenly it fell down very drastically.
Okay.
And you would have had a stop loss hit on the next candle.
Okay.
Now this is something you need to be prepared for. There is no way you can avoid your stop loss hit.
Yes, true.
This method only helps you to catch big trends at the cost of a few stop loss hits.
Okay.
If you're totally averse to any stop loss hit, then I don't think you can trade in any method. Honestly.
Correct. Right. But on call side, sir, we got entry on, I think, on around 1 o'clock, I think, sir.
Yeah.
Okay. So we should wait till that, patiently should wait till that candle
Yes, you have to wait until this high is broken of the previous candle.
Okay.
That is why we keep SLM order.
Okay.
So that if it hits, we know we are in the trade, and then they let the trade run.
Okay. To summarize, sir, we have to be in the chart both in the Heikenashi candles only.
Correct.
So whenever the candle turns to red, we have to buy there. That's all.
Correct.
Okay, sir. Okay.
So how do we deal with it in a sideways market when there's premium eating, like Vaibhav sir was talking about initially
On
before starting?
sideways markets, you don't have any way of dealing with it. You have to accept your stop loss hits, or if you know that the market is going sideways, stop trading.
So this will work on futures chart also.
It will work on futures, it will work on commodities, it will work on stocks, it will work on crypto, everything. Principle is the same. What you are basically trying to do is you're trying to say that I will enter a trade when the downtrend is over or the pullback is over. That is all you're trying to do.
Okay, sir.
So it should work on all the instruments. Anyone else has any questions? Okay, now who was it? Abhi was asking me about this sideways market. Okay, let's see how to deal with that also. Sideways market actually, I mentioned in the beginning of this webinar session, I was looking at my old ways of trading. One second. One of my earliest approaches to trading in Banknifty was using the Bollinger Band, where I used the band to identify a sideways market or a trending market. And there's an indicator called a Bollinger Bandwidth, which tells you when the band is squeezing together or it is expanding. When the bands are expanding, you expect a trending move. When the bands are contracting, you expect a sideways move. So what I did was I put a moving average, a 10 period moving average on the Bollinger Bandwidth as a source. What this helps me to do is to identify these periods of sideways markets when the price is gone below when the Bollinger Bandwidth is below the moving average. It tells me that bands are going to contract, or in other words, it is going to become a sideways market. So during that time, what I typically do is I look at buying at support and selling at resistance, or buying at the lower band and selling at the higher band. Let me show you some decent example of that. You look here, when the price reaches the upper band, you immediately buy a P, then hold on till it comes to the lower band. Because Bollinger Bandwidth was below the moving average. Abhishek, you
Yes,
got
I
it?
got it, sir. Yes, I got it. Got it. So could you show the setting once again, please?
Setting is the normal settings only. Bollinger
Okay.
bandwidth is 20/2.
Okay, so the standard settings. Okay.
Yeah, and moving average is 10 period moving average on the bandwidth.
Okay, so thanks a lot.
See, this only tells you that band is about to expand or contract. The moment the moving average is above this thing,
It
you
will
know.
be default settings, no, sir?
Yeah, it's all default settings.
Default setting, that is 10.
What we are basically trying to do is you're trying to find out when this sideways market will start. And if there's a sideways market, you either avoid the trade or do a small scalping trade here. Buy at the lower band, wait for the price to hit the upper band and exit.
That will be applicable on normal candle, no, sir?
Yeah, it will be applicable on normal candle. Stock intraday example without futures options, stock swing trend strategy. Shall we take Dr. Reddy as an example? Let me remove all this. In a stocks trading scenario, the principles are the same. You are looking at a low of a green candle to sell or a high of a red candle to buy. It's the principle is going to be the same always. So if you take the Friday example, your low of the green Heikenashi candle was broken by the second candle. At the time, your normal candle was saying what? It said to take entry below the low of this candle, this red candle. And you took the trade, short trade, and held on to it. You either booked your profit immediately or you waited for the end of the day. That again depends on you. So your entry was here, your stop loss was above the high of this candle. You probably had what, 1:1.5 risk reward on that trade. Now, as far as the swing trading of stocks is concerned, again the same principles will apply. If you're not looking at futures, you're only looking for a buy trade, and the same Heikenashi will help you doing that. So when you buy above the high of a red Heikenashi on that day, this was the price. So you just buy and hold until you get thrown out of the trade. What you do is you place your stop loss below the low of each candle until the market throws you out of the trade. Then you look for another opportunity to enter the trade again. So the principle of trading using this Heikenashi method is the same, always. You could devise many other methods like looking at a higher time frame to stay in the trade. So if you wanted to stay in the trade for a longer time, you would just look at the higher time frame and say, I'm not exiting the trade. Okay, now commodities. I think Swaminathan is here. He will only have to do that. But what I could show you is how the chart will work on commodities and currencies and everything, in fact. Same principle on currencies. Buy above the high of a red candle. Keep moving on in your trend. If you want to look at intraday, same principle. Sell below the low of a green candle. Buy above the high of a red candle. As far as commodity is concerned, for some reason, whenever we think of commodities, immediately my hand only types crude oil. Okay. Exactly the same principles will have to apply. Okay. Some people say that they find better success using a 1 hour time frame. I'll leave you to experiment with that. Somehow I am partial to 15 minutes. That doesn't mean that all of you have to trade only that. If you want to trade 5 minutes, you go ahead and trade 5 minutes. But be aware that there will be whipsaws. You'll have to be extremely quick in getting out of trade. Otherwise, it's fine to use any time frame. Are we done with the basics? Has everyone understood the basics?
Good evening, sir.
Good evening.
कैसे हो? How are you?
Excellent, excellent.
Yeah, it seems nice to hear your voice after long. So I was late today. What was discussed? Anything new?
Nothing,
Okay.
nothing. We were just going through the basics for some of the people who had asked me to explain the basics again.
Okay. You were talking about some multiple time frames, like 1 hour and all.
No. In fact, multiple time frame is only for looking at my trend. I like to trade the 15-minute time frame.
Yes, sir.
If somebody wants to trade 1 hour or 5 minutes, it is up to them actually.
Yes, yeah. Okay. So all well now, sir?
All well. Perfect.
Okay. Even cough is not there and it's not there.
Cough is there a
Voice is
little
clear.
bit, but that's okay. It'll go away.
Yeah. Yes, definitely. it will go away.
So
Okay, sir.
Abhishek, you're asking me about the strike prices for options if you're trading 15-minute candle. What does it mean?
So by that I meant, sir, because you were giving example on the daily chart, and you said you choose around 1500 strike that is away rather.
Yeah.
So, but if you're on a smaller time frame, wouldn't that come closer to at the money? I mean, not in the money, but somewhere closer, more that around say 300 points or probably.
Not necessarily. I like to trade only deep out of the money options. You can choose if you want to be closer to at the money. You can go ahead and take some strike prices closer. How much closer you want to take depends on what is the risk profile you have, and depends on how much you are willing to put at stake in the market for buying that option. I would not want to buy an option at 500 rupees. I would like to buy it at less than 150 rupees.
Okay,
I don't like to pay too much for 1 kilo of carrots.
So, but wouldn't being further away, the movement of the price gets dulled?
Yeah, it will get dulled. It has everything to do with the option Greeks. Your delta will keep on decreasing as you move further away from the price, from the current price. And it's okay. I mean, if my movement is, let us say, I buy an option at 30 rupees and it moves only to 60 rupees, I'm still getting 100%, no?
True, sir, true.
So for me, it doesn't matter. For some people who are impatient, they want to see green MTM on their screen. they would like to go nearer to the ATM and buy.
Future also, if you can, right? If
Yeah,
you're not comfortable with options.
yeah, you can trade anything.
Okay.
I like trading options because with all this SEBI margin rules and all those things, I found that you have to pump in more money into your trades to get the same return, which means your percentage returns come down.
Mhm.
Whereas in options, I don't have that problem. I'm already using a leverage product, and they can't do anything to option buying. Option selling is margin is high. But
Yes,
since
sir.
I'm an option buyer, SEBI cannot do much more to damage my positions. Options is a very highly leveraged product. That is why I like it. The point is like you use less of your money to make more money. That is the way I look at things. Of course, a lot of option sellers may disagree with me, but this is the way I am. I am cheap. So I like to buy cheaper options and make money. Like, I think it was, I forget what strike price it was on Friday. My son took a trade. He bought some option at 80 rupees.
35 something, 200 something, sir. I think so. I was checking that one.
And
35, 200 something.
I think he took some strike price at 80 rupees. It went up to some 260 rupees or something. He was pretty thrilled about it.
Hello, sir. This is Kalpesh.
Yeah, Kalpesh.
Sir, I took the option 36,000 the call around 35 rupees.
Okay.
Sold 102. It's a very
It went
power
to how much?
TM, but I 102.
Mm-hmm.
36,000 call. I took it 35 rupees and I sold it
35 and
102.
102. That's good, no?
Yeah, yeah. Because that I seen that there's a lots of put writers are there in market. So just got the confidence on that I took that call.
Okay. When Friday was one of those days, everybody should have made money, right?
Yeah. Because the SBI result is the
Unfortunately, I
actual.
was not able to.
So SBI took all the bank and Banknifty took the एकदम ऊपर लेके गया sudden.
Swami sir, this is Arun here.
Yeah, Arun.
One question. So in that Banknifty example that you showed,
Mm.
the 10 minutes Heikenashi candle, right?
Mm-hmm.
So in the opening, you said like, yeah, we didn't have an opportunity. I mean, can we consider the prior day's candle as a reference?
You can, if you're good enough at reading price action, you can consider that, right? But most of the time, people will get confused. That's why I decided I will not make it part of my teaching.
Okay.
You can definitely use it.
Okay. Sure. Thanks, sir. Thanks, sir. And just one more thing. I see your the auto admit you are doing it.
This
So there is a
auto-admit thing,
plugin. Yeah, the plugin is like that. You can probably install it. I just pinged
I've
the
installed it actually. Vikram Talwar, I have not seen you here before.
Hello. Hello, sir. Hello.
Yeah, Vikram. Able to hear you.
Sir, I'm actually new to this group. Sir, I'm just a beginner. I am trying to learn the method, sir.
Is it easy or tough to learn?
No, sir, I'm trying my best to learn.
Okay.
So
Any
you,
difficulty, let us know.
Anji sir?
If you find any difficulty learning this, let us know, I said.
Okay, sir, okay. Okay. Definitely, sir.
Yeah, sure.
Okay, sir.
So let's try. You were asking about Asta something. Vivek Gupta. HK 15 minute and Bollinger Band is enough actually. Nothing else is required. Clear. My name is what? Who's this? My name is what? Shilpa, are you clear about everything? No voice. Nagaraj, I have not seen you before.
Good afternoon, sir.
Good afternoon.
This is my first meeting with you.
Okay, great.
I attended a previous meeting with one of the other members in the group.
Swaminathan, is it?
No, not one with the other indicator where he said.
Yeah. Viralji.
Yeah, Viramji. Yeah.
Okay. So how are you getting along?
Good, sir. At this point of time, I'm getting along good.
Mm-hmm.
And thank you for the same.
No problem. If you have any trouble learning, reach out to any of us.
Sure.
Yep.
Thank you, sir.
Welcome. My name is what? What is your name? No response. Okay, one more question on how to trade top gainers intraday.
Sir, can you tell us on the VIX?
Sorry?
Can you tell us on some VIX? What is the meaning of that VIX actually?
VIX.
Yeah.
Yeah, VIX is basically a volatility index. Okay, it tells you about the fear and greed in the market. You can draw some correlation using this, though I have not been a big fan of using this. Sometimes I do use it to see where the market is going. VIX increases, right? Then it means fear is going up in the market and your Nifty and probably Banknifty also will start falling. If VIX is decreasing, it means that fear is less. So people will start buying. So market will go up. The easiest way of reading the VIX I found is you slap some indicator on it. Let's say super trend. Even with the normal setting. If VIX is above super trend, you will see that market is in a downward path. And if VIX is below super trend, you will find that market is shot up very high.
Okay,
That's
sir.
what happened on Friday, if you notice. Like, let me switch over to Banknifty again. Let's look at the last about 5 days. Okay.
Okay.
Now, here VIX was below super trend. This was on 5th, 18.5. What did the market do on 18.5? Market tended upwards. Then when VIX is above the super trend, the market fell.
Sell side. Okay.
Now here you see again the VIX started falling. This is on 17.5. When VIX starts falling, market goes up. Market did go up after the initial pushback to this wick level. It started going up. Basically, I suppose you could use it to establish a bias for the day.
Okay.
Though I have not been I have not studied this very thoroughly. But what I can see is that if it is above the super trend, the market falls. If it is below the super trend, market goes up. You can keep on back testing this for various days. See, here market fell for the next 2 days, the previous 2 days rather. Because these 2 days, VIX was above the super trend. And before that, you see 1, 2, 3 days.
Yeah.
The market did trend up. Unfortunately, it formed a red candle.
Yeah.
So if you have to take a bias and say I want to trade only C, you would still be right. Sorry. And this is an interesting day. Half day it was down and half day it was up.
Yes.
This was on 4-5. It went up and then came down. So first half of the day, prices were up and then prices started falling. And the VIX crossed.
Any idea on the correlation between dollar index and silver gold prices?
I have no idea, honestly.
I think it's inversely proportional. I mean, when the dollar index rises, silver goes down.
That's what
Something
I
like
was
that.
also-
I just wanted some clarification on that.
But to me, I never felt the need for analyzing all these things because I was anyway following the price moves. Right. If it goes up, it goes.
Yeah. On Friday, what happened was I was long on silver. I was expecting it to break previous day high. Didn't do that, and I didn't book my profit. Ultimately, I had to close on a loss. So, but basically, they say that because dollar index went up, broke the resistance, that is why silver fell. So,
my usual.
I intended to go positional. I wanted to hold it for a long time. Then 1,500 points it fell from the top. So
my usual answer to this question is, what do you want to know? What is under the hood?
Sorry, come again?
Why do you want to know what is under the hood? You want your car to take you from point A to point B.
Yes.
So I don't do too much of this analysis paralysis stuff.
Okay.
I like to keep it simple. That's why I've not even looked at VIX now. People could form a lot of theories about VIX and how it impacts your market and all those things. I don't even look at this actually. But now that some gentleman has asked this question, I thought, how will it look like if you put a indicator on it and see? And invariably this seems to work. If VIX is up, that means market has to fall.
I use 20 EMA on a VIX chart to identify sell. If VIX is above 20 EMA, I never sell. I keep hold.
Okay.
I mean, only when it comes below the 20 EMA, I start selling.
I never even thought about using VIX and all those things.
And in fact, now one more thing that I do is I don't buy till VIX is about 20 EMA. That is one thing probably, because VIX goes high, option prices invariably increases. Or rather, when the option prices are increasing. It does, because if you're buying when the VIX is going in direction, if the Banknifty goes in our direction, we'll still make profit or very little profit.
Mradul, what capital to use? Answer is, how much do you have?
Yes, sir. 5,000.
You have 5,000, no?
Yes.
Okay. Which broker are you dealing with?
Angel broking.
Fine. So start with 5,000.
Okay, sir.
But
Directly
if you're starting with 5,000, follow the Heikenashi rules very, very strictly.
Yes, sir.
Okay. That means you will only trade as per the bias of the day. If market is going up, you will only buy call option. If market is going down, you will only buy put option. Don't get distracted.
Okay, sir. Thank you.
If you try to trade both sides, then you may end up losing your 5,000 also.
Yes, sir.
And just to make you feel better, I started trading with 2,000 rupees. So 5,000 is not bad.
Yes, sir.
How to trade in top gainers intraday? You want to, Sunil, you want to trade stocks or you want to trade stock options? Sunil Kumar Padi. He has left the meeting.
Sir, in options, tell me, sir, how to trade in like top gainers.
Yeah, stock options, you can trade using your top gainers. What you do is, at around 9:45, you watch the sectoral indices of Nifty. Okay, it gives you a breakdown of what is doing well and what is not doing well. Now, if the market is on the upside, Nifty is in green, you look for the highest percentages on sectoral indices, highest percentage gains. So obviously, I think on Friday, Banknifty stole the show, and financial services also. The rest of them were not that great, right? So once you identified which sector is doing well, then you click on that particular sector and you see which stocks are doing well. Around 9:45, you may have a set of stocks here. You put these stocks in your watch list, maybe the top 4 or 5, and start looking at the price action using Heikenashi. And you enter based on the Heikenashi method, strictly as per the Heikenashi method. This is a top gainer stock, so you will have to only look at red candle to buy. If you're looking at a top loser stock, then you will look at green Heikenashi candle low to sell. Clear, Shani?
So sell means buy put, na?
Yeah, sell means buy put.
Okay.
And
sir, and just being that top gives us the top move, I think we won't get the entry in that the morning would I think so.
yeah, in the morning you won't get entry. If you feel bad about not getting entry in the morning,
okay.
then you will have to go to a different method like 15-minute ORB or something.
Okay.
That also would work. I mean, I've done both these things.
Okay.
But the only advantage of using the top gainers thing is your direction is already decided. You're not going to look at the P. You're only going to look at C.
Call only. Yes.
So when you look at only the call option, you select a strike price which is about at 9:45, whatever is the price.
Okay.
You take about 3% away from that.
Okay.
That's the OTM option.
Okay.
The reason is you will get cheaper prices. That's nothing else.
Okay.
Right, 3 to 5% away if you take a OTM option. Right, you will still get during the day you will get a momentum move which will give you profits.
Yes, sir. In Dr. Reddy, sir, last time sir, it was doing a very good actually. Suddenly it was a pullback, sir. Again, it was like it came down very drastically. It happens, sir.
It will keep happening, but the point is when you're trading a top gainer stock, you look for the first 15-minute candle which is not too wide.
Okay.
If it's too big, then the momentum is already over by the time you enter the trade.
Yes.
Then you won't get much of a move, and you will end up being disappointed.
Correct.
Instead, you look for a smaller size candle in the first 15 minutes.
Okay.
And then if it still comes in the top gainer list, that means it is making a steady upward move.
Okay.
So you will have less unpleasant surprises to deal with. Okay, assuming you entered a top gainer trade and the trade goes against you, what do? You quickly hedge yourself with a PE trade.
Correct.
And since you can hold on, you hold on for the next couple of days to see which direction the stock is moving.
Yes.
There's one more patchwork remedy.
Correct. But seeing this on daily time frames, sir, we can also judge now, sir, because you are showing that some stocks. It was like Heikenashi was showing some red actually. Then it turns to green in a daily time frame.
Yeah.
So there is a probability of, I think, buy, call, something like that.
Yeah. Well, definitely.
Daily time frame, if you check, I think it will get a clear idea, I think.
You will get an idea, but what you're wanting to see is a quick momentum move on the same day.
Yeah, correct.
You don't want to hold any option trade for too long because of theta decay issues.
Okay. But in stock options, like in stocks, sir, I think decay will be like far, like not in a weekly mode, it's monthly basis.
Yeah, that is all the more reason you have to worry about theta decay, no?
Okay.
Monthly options is not that great actually.
Correct. Only if the momentum is there, it's very good actually.
The reason we are using it for intraday is like, especially using the top gainers, is that you know for sure that momentum is there on that day.
Okay.
That is what you want to capitalize on.
Okay.
And you trade this kind of stock options intraday, you can expect about 40 to 50% return easily.
Okay, sir.
Sometimes even 100% return.
Okay. Sir, and one last thing, sir. Please take a program on the zero to hero program, sir.
Zero to hero?
Yeah.
You want to gamble?
No, not gambling, sir. No. Purely price action. What you're saying, you have to do it. Anytime, sir. Anytime. Not to kill it. Anytime.
Yeah. See, actually, zero to hero trade is nothing great, actually. Let's take, this was Thursday, right? Yeah.
28, sir.
So around 12 o'clock or maybe after
2:30, I think, sir, the price went down.
145 to 2.
Yeah.
Fine. You buy a CE and PE.
Both.
Yeah.
Okay.
Both the same strike price.
Okay.
You will take a CE and PE and you let the trade run.
Okay.
Now, since you're taking at the money strikes, one of them will become in the money, one of them will become out of the money.
Okay.
Now the in the money option will start accelerating at a faster rate.
Okay.
This imbalance will give you the profit.
But whereas other leg will be in the loss also.
The other leg will be in loss, obviously. Only thing is, if you have lots of time, like if you are taking this trade, let's say at 12 o'clock.
Okay.
And you buy a C and ATM.
Okay.
You had a lot of time for the price to move down. So the losing leg will lose at a slower rate. Winning leg will start winning at a higher rate, at a faster rate.
Okay.
You need to have patience to wait until you see profit, and you have to close both the legs.
Yeah, correct.
Together. What I found is in zero to hero trades, it's generally a matter of timing.
Yeah, time, sir. Yeah, that's very true.
And for this, probably you can use your Bollinger Band indicator.
Okay.
What you want to do is you want to buy C and P when Bollinger Band is squeezed. Right?
12 o'clock.
Whenever the Bollinger Band is not expanding, that is the time you want to buy the option, because both of them will be at the cheapest possible price.
Okay.
And once it starts expanding, you're not going to get a cheaper rate for your P or whatever.
Okay.
So this is a price at which you will ideally buy around this place.
Okay.
So if you use the Bollinger Band, you may be more right. Rather, you may be right more number of times.
Okay.
The trick is in buying when the volatility is low. And then you wait for the volatility to expand.
Okay. For this, sir, the same time. So time frame will be same, 15 minutes only or 5 minutes.
You can choose anything, but I prefer 15 minutes.
Okay.
5 minutes, I cannot handle that speed of execution.
Yeah, correct.
And the key thing is, having bought a C and P, you really don't care which way the price is going.
Correct.
So you just have to hold on till the end.
Correct.
Normally what I do is I exit my trade around 3 o'clock and then wait for one more opportunity to enter at around 3:15.
Okay.
3:15 I enter one more C and P. This is a pure out and out gamble trade.
Okay.
And more often than not you will lose.
Okay.
But on days when you have a strong momentum and there's a big spike or something,
okay,
you will find that you gain a heck of a lot.
Okay. Usually you trades on like how many lots? Like 5 lots, 1 lot, 10 lots?
Actually, the answer to this is...
depends upon the risk. That's all.
No, not only the risk, it's about also how much you want to earn per day.
Okay.
Right. So my needs are very limited, so I trade maximum maybe 50-60 lots.
Okay. If you are doing that CEP, you should take the same place. Like if I'm taking 5 lots of CE, I have to take 5 lots of CEP also.
Correct. You shouldn't have any imbalance there.
Imbalance there. Correct. Yeah. Correct. Okay.
The trick is in identifying your time of entry.
Yeah, correct.
You enter at the time when Bollinger Bands are squeezing down.
Okay.
Then you get a very good high probability trade. Unless, of course, the market continues to go sideways forever.
Correct.
Which we assume will not happen, especially on an expiry day.
It will be a spike or will be like downwards. Like from past 2 weeks, it's already downward. It's going down.
See, we don't want to anticipate whether it will go downward or up.
Yeah, correct.
We really don't care whether it goes up or down. It has to move.
Correct.
And test your patience like mad. If you entered, let's say, around 11:30 or something, it's going to test your patience like mad. Right? You really can't help it. You have to hold it and just hang on. Sooner or later, the move will come. And some of my biggest bucks I've made only from this kind of hero to zero jackpot.
And sir, if you find that our some like you have bought both C and P, 5 lots, and we are seeing that from downward, it's going downwards. Can we exit the see there only after seeing that the conversion?
Yeah, but you also have to exit your PE at the right time. No, otherwise you will end up having supposing the price moves against you.
Correct. Okay.
You'll always be faced with uncertainty. No.
Okay.
I prefer to close both the legs together and take my profit.
Actually, so last Thursday we had one gap there actually. Just we filled. So I was looking out at that gap actually. So it got filled actually. Yeah, that gap, yes, sir.
This one, huh?
Yeah, correct, yeah. No, not that one, sir. I think 14. I think this gap.
This gap.
Yeah, I think so. It got filled, sir.
Helped you?
What, sir?
How it would have helped you, I said.
Sir, actually, I was in the PE trade. I took around 5 lots of PE. By seeing that gap, I think it may fill. It wasn't this one, sir.
Okay.
But it got filled, sir, very nicely. But I actually exited very fast, sir. Actually, when it filled the gap, no, I closed my trades. But sir, again, it went down. Again, it came back, sir. Yeah.
Abhi, how many stops to expect in any 10 trades? It depends on whether you are in a sideways day or in a trending day and all. On sideways days, I think people have faced up to 5 stop losses. But you should also know when to quit.
Yes, sir.
But, yeah, tell me, Shreya.
Just now you have explained that volunteer bank, so I can't understand that clearly. How to take it up?
How to
take it like that you told, no, like P and C that we'll have to take it, but I can't understand that. When that in the squeeze, when we have to take it?
In the squeeze, it doesn't matter when you take it.
Anytime you can take it.
Anytime during the squeeze, you can take it and still make money. You can't anticipate when it will expand, no?
Yeah,
after the squeeze. So you take during the squeeze, then hold on. Whenever it expands, let it expand. Deval, I don't make any daily journal, etc. I'm not into theory. I'm into practice. Earlier, I used to do it when I was also a learner. Then I realized it doesn't help me.
So what is that? Even 37,000 strike price has gone up, sir. Is that advisable to take 1 or 2 lots in that?
37,000 CE.
36,500 and 37,000 CE.
It went up to 36,500 already, no high? Oh, sorry, 34,600.
Okay, 34,600. But 37,000 also went up and 36,500 also went up.
Yeah, they're bound to go up, no? When the momentum is there.
But is it advisable to go for it or we shouldn't look at it?
I really don't know because, as I told you, I don't predict.
No, I'm asking you, like, is there any proof like that? Because already you have explored it.
If you are willing to lose that entire amount, what is the price of 37,000 CE now? 36,500 is at 55 rupees. Yeah, you can go ahead and take it. Small loss only you will have, no, if you have it also.
Yes, sir.
Anyway, I have marked out 36,100 and 36,500 for my trading on Monday.
Okay.
Swami sir,
Ah,
I have taken June monthly contract 40,000 CE at the price of 40 rupees. Now it's trading around 83.
very good, yeah.
I
What you
don't
need
know.
is the momentum to continue.
Yeah. That's what I don't know. Monday it may reach, and if it went up, no. So I'm thinking about I will exit by 100 or 110 like that. It's actually for OTM and also monthly contract. June 40,000 CE.
See, what I used to do was I used to look at the monthly chart of Banknifty.
Yeah, sir.
Say if it is an uptrend, I used to keep buying. Whenever I see a red day also, I keep buying the lot or two lots, whatever is a thing.
Okay.
So at the end of the day, at the end of the month, you will end up with a decent profit. That's how I used to do it. But what I found was that theta decay was too much. Though it did give profits, it was not very happy situation. Then I stopped doing it.
But for me, it was daily candle method. Sir. I'm happy with that.
Yeah,
Even on Friday, I got 36,500 fee. So on the day itself, I closed at the rate of 170 like that. Again, I bought it for another 500 difference, and it went till 183 like that.
Okay.
That's fine. At last, I ended with the green ATM, and I didn't carry that position.
It's okay.
Again, that's what.
See, I also trade the daily candle, but I always close my position every day.
Yeah.
Next day will be a new day for me.
Yes, sir.
Here I am a bit worried because it has gone up above the Bollinger Band upper level. Right?
That's what, sir. Right now, what we are showing on the screen, no? So it has been already out of Bollinger Band, so little worried whether it may fall or like that.
If it's a fall, then you will have a problem, no? If you're carrying forward.
Yeah, sir.
It's okay. You can always rectify it with another PE buy.
Sir, what does it indicate, sir, in the middle of that one? Can you show me that one? Bollinger Bands, what we are showing in that middle line?
Middle
Upper
line is
band.
a 20 period moving average.
Okay.
That's why Bollinger Band setting is 20, it says, no? 20 is the moving average line.
Okay.
The 2 is the standard deviations which you select.
Okay.
Normally, if you take a 2 standard deviation, 95% of the observations will fall within the band.
Okay.
That means whenever the band extreme has been crossed, price will have to come back to the mean.
Yes, sir.
So we'll wait for tomorrow to tell us whether it's going to continue or not.
Yes, sir. Trend is still uptrend only.
Trend is uptrend only, absolutely no doubt at all. Okay, now we are talking about the VIX now.
Yes, sir.
VIX is below the super trend.
Yeah.
Right. Monday also, if it is going to be below the super trend, you will have one more upward day only.
Okay.
But we can never say anything, no, about the
Yes, sir.
market. Market can do anything.
Yes, sir. So that is the reason I left with the stock option, sir, because I'm happy with this one because I'm putting less capital in that. It's okay for me. Even I'm taking on Friday deep OTM, and maximum if I lose it for only one lot around 1K or 2K, that's okay. For me, it's okay. And I don't want to even I don't want to even buy multiple lots. Every day, what my intention is that I will fit with only one lot. Let us see after 1 month or 2 months or 3 months if I'm having, so then we will carry by using 2 lots or 3 lots, then it's okay.
Yeah. No hurry, no. Do it slowly.
Yes, sir. But anyhow, it's working fine for daily candle method, sir. I'm happy with that.
it takes a little bit of guts to do it.
Yes,
Once
sir. Yes,
you've
sir.
got the guts to do it, it'll be nice.
Yes, sir. I'm ready to take risk about what I premium paid. Even if I exit on that day, might be the premium may reduce off of that one. That's
Correct.
okay.
Correct.
Yes, sir. That's okay for me. Again, I will be having next day.
Definitely.
Yes, sir.
That's good.
For stock options, minimum we need around 20K or 30K like that, sir. Even if you want to take the top gainers also. And the only return will be by putting much more capital on that and by seeing top gainers also. If you exit early also, you will be having around 2 to 3K, sir. I don't think so. What we are seeing, I felt it's good. Money deployment like ROI, what you are saying. So I think you already studied all this and you put it with the Banknifty only. I came to know that.
Yeah, mostly I focus on Banknifty because I also like to trade only Banknifty.
Yeah.
And sometimes Nifty.
Yeah.
Stock options and all I don't trade nowadays. But the method is solid. That's why I keep mentioning that method also in all my webinars.
Swami sir.
Hanji.
Sir, again on the daily method, because I keep asking you, so you don't use Heikenashi, you only use 15 minutes normal candle.
On what method?
The daily candle method. So you use 15 minutes time frame normal candle.
No, daily candle method is totally different. Ravinder. What you do is, you look at your bias. Let us say the bias is up. Why is the bias up? 20 period moving average. I'm using the Bollinger Band as an example. Moving average is sloping upward. Correct? So I'm an uptrend technically. So I have to keep buying only. So what I do is I buy a call option because the bias is up.
So you use 0.3% strike price.
Basically. No. 0.3% is for stock options, Ravinder.
Okay.
Stock options we trade with 15-minute Heikenashi method. For Banknifty, we trade the daily candle method because I can just place a trade and walk away. I don't have to look at 15-minute chart and all those things.
And you take the FAR OTM?
I take FAR OTM to limit my risk. See, if I'm taking a risk of 60, 70 rupees, I don't mind, even if it goes against me, I don't mind losing that money.
And what time frames you use?
Daily.
One
day.
Yeah. Okay.
What I do is I buy a CE in the morning and then close my computer. I go back to sleep or I read something. I don't look at my 15-minute chart. See whether the price is going up, coming down and all those things. I'm not worried.
Sir, at times what happens?
The essence of this technique is that you should not worry about the intraday movements.
Okay.
As long as it's an uptrend, you keep on buying a call option. There are days you will definitely lose. There are days when you don't have momentum and you find a doji candle. These are days you will definitely lose money. But the loss will be small. In any case, my maximum I can lose is only 60 or 70 rupees, no? So I don't mind taking that loss.
So at times what happens, 9:15, it is like the candle is going upwards, but after a minute or two, it is below the opening price. So you change your position?
No, I don't.
Okay, so at 9:15 basis
my moving average here is sloping upward, right? I'm still in an uptrend only. I don't change my decision. I take that loss on that day.
Okay.
Like on this day, let's say. It went up and then came down.
It is good to attend all the webinars because now my doubt is getting cleared.
See, if you can't stomach the loss, don't try the daily candle method.
What I'm saying that till now, I was thinking that you take 0.3% on a daily candle for either
No,
for stock.
no, okay.
So
That,
that's what I'm saying. Today I've been attending quite a few webinars, but today my doubt is cleared.
yeah. See, daily candle methods for lazy traders like me. I don't want to sit and see the chart. That is why I take this kind of extra risk and
Me
trade.
too, sir. Me too.
Yeah.
Because I'm having some classes on the online class now, so I can't concentrate and frequently watching the monitor.
Correct.
On Friday, what I did, sir, I waited for 15-minute candle and I marked open position and the next candle forming next higher, no? So I took CE trade.
Very good.
So based on daily, I waited for a whole day and I quit it. That's it. And,
Actually, that's all there is to it. No, there's nothing magical about trading. No.
yes, sir. Yes, sir.
Most
But
of the
the
time,
thing
only your
is
mind
that,
is the culprit.
yeah, sir. What my thought is that even there are some sideways, and also by considering 24 candles out of that 24 candles, I mean per month, then you will be having in green MTM only. Sir. I'm thinking like that. I just back testing this one, and every day I'm doing this one, and also per month. I mean. After that month over, you will be having at least by investing only 2,000 around, you will be having 20,000 green MTM.
Yeah, if it happens, it's good.
Yeah, sir.
Sir, 0.3% stock ones, top gainers mein, to select the strike price.
Not 0.3%, it is 3%.
Okay, 3%.
See, the idea is, Ravinder, in a top gainer stock, it is likely to move at least about 3% or 5% or even sometimes 10%. So we are trying to take a OTM option because the price will be cheap.
Okay.
Right? That is the reason we add about 3% to the 945 price and then take that particular OTM option.
Sir, if you are going by the day time frame, what will be the stop loss, sir?
No stop loss.
No stop loss. You have to take whole risk.
No, you said you will go by the, you are not using 15 minutes, you will be using only a day candle.
Correct.
So whether you will keep any stop loss or?
I will not keep any stop loss because I am willing to take a risk of that 60 or 70 rupees which I pay for the option.
Okay, thank you.
My entire amount which I pay is at risk actually.
Entire amount will be lost. Okay.
Correct.
Thank you, sir.
Welcome.
Sir, I have seen in one of the chats, I guess it was Soumyadeep, he had mentioned about 1 hour time frame Bollinger Bands. I was not able to understand that message. I'm trying to find that out. It was there in the chat, sir, our group.
What did he mention?
Sir, I'm trying to find out that message because I have not understood and that was there in my mind to ask. Vivek, you there? Vivek?
Soumyadeep is there, I think.
No, sir, Vivek. Vivek, can you just mention that particular message because I need to have a clarity.
Sir, Soumnath has written that he uses 1 hour time frame Bollinger Band to get the extremes of Bollinger Band as a support level.
Extremes of Bollinger Band as a
support level for let's say he uses 1 hour time frame and that Bollinger Band extreme gives the support of that fall.
Okay.
Yes.
See, let's be very clear about this Bollinger Band theory. Let me go to the 15-minute chart or maybe even a 1 hour chart. See, when the price reaches the extreme of the Bollinger Band, then price has to retrace back within the band. I remember also seeing that message of Swaminathan where he had mentioned that it is crossed below the 20 period moving average line and he expects it to come down to the lower band. I presume you are talking about this particular thing.
Yes, sir.
So when the price is falling and it has crossed below the 20 moving average, it means that momentum is to the downside, right?
Mm-hmm.
So the price has to come to the next level, which is a lower band.
Mm-hmm.
This is what he had mentioned.
Okay.
Somideep, if you're here.
He does. But sir, it has to be on 15-minute time frame or 1 hour time frame.
No, he looks at various time frames to see whether
No,
there's
sir.
a risk in the trade or
Sir,
not.
there is some confusion. He has not said that he's using those extremes as support or resistance. He just said that if the price is coming down off the median, he's just checking.
क्या हो गया?
Sir, yeah, this is Sandeep. Sir, what exactly he meant was basically for the commodity trade, what he took. So for the exit purpose, he was just checking to where to
Where
get
the
the profit booking. Profit booking on the 1 hour time frame. He took
Yeah.
entry on 15-minute HA method only,
Correct.
but
That
he changed to 1 hour to get the maximum profit out of it. So
Correct.
that was all
When
about.
the price reaches the lower band, he said he will exit.
Just to see if there is enough space for the price to move down. Yeah.
Yeah. Ravinder still confused?
No, sir, I got it.
Okay.
I got it. Thank you. Thanks, everyone.
Sir, I have a psychological question. Due to this pandemic and now we have again this band is extended kind of look. Will it affect the market or how it's going to be?
What you should worry?
I don't know, sir. Somewhere I have that doubt. Will it?
No, but whether it affects our market or not, why you should worry?
So we are in the trade, like how it's going to be, like will it be, like will we having only the sideways market or will it be in the range market, kind of that way?
Again, why you should worry? You have to answer your own questions now.
Okay.
Why should you worry about it?
So if we have a trending
By worrying
market,
about it, can you prevent it?
no sir. No sir, I just want to have some idea like whether we can earn this week or not, this month or not, kind of.
Again, why do you want to know? Keep asking why, Shreya.
Okay.
Why do you want to know? See, there is somewhere within you a need to predict. That you need to overcome.
Okay.
There is no need to predict your market at all. You just follow where the price goes. Only thing is, if the price is going sideways, you're going to have a few stop loss hits. That's all, no?
I get it.
You don't have to worry about what the world market is doing, what pandemic is doing, whether Narendra Modi will announce something and make the market fall. All those things you need not worry. When the price falls, you go with it. When the price goes up, you go with it. Simple, no?
Yes, sir.
Don't try to complicate your life.
Okay, sir. Sure. Thank you, sir. That's what I want to hear.
Yeah. I notice you tend to think too much.
Yes, sir.
By thinking, what have you done? Have you changed the world in some way? No, no.
No, sir.
Follow what the world is doing and keep moving with it.
Okay, sir. Thank you.
Yeah, welcome.
Sir?
Yeah.
Sir, if I am choosing a day type frame, what will be the strike price I want to choose? Sir? How difference?
See, I told you that I take a deep OTM strike price,
Okay.
which is priced around 60 to 70 rupees, maximum maybe 80 rupees. So you have to decide what is the amount you are willing to risk on your trade that day.
Okay.
In case your decision becomes wrong, you're going to lose your money, no?
Yes.
How much can you lose?
Okay.
That is what will determine your strike price.
Okay.
And just for your information, I'm thinking of maybe 36,100 C for Monday. So that means I'm willing to risk about 90 rupees.
Okay. Sir. Thank you.
That will be my maximum loss. No?
Maximum loss is 90 rupees. Okay.
Yeah.
Sir. Well understood. Thank you. Sir. Thank you.
You're welcome.
Swami sir, can we use a Bollinger Band for HM method also, or only for normal candle?
No,
That
you can use, see, HA method, you won't find a great deal of difference, I think. What is the point in using a Bollinger Band for HA method? Ultimately, you are going to trade the price, which is on a normal candle, right?
Almost same. The method itself is showing. Yes. Okay.
But what your HA method can show you is whether your entry point is right or wrong. See, you are at
Yes,
the
sir.
lower part of the Bollinger Band, right?
Yeah.
You see
Yeah,
red
sir.
candles forming.
Yeah.
So around that time, you see whether entry can be taken in a upward trend,
Yeah. Yeah.
right?
Yes,
You can
sir.
take the entry here or you can take the entry here.
Okay. Yes, sir. I got it.
Yep. Actually, the reason we started talking about Bollinger Band was to show you that Bollinger Bandwidth method, basically to identify sideways markets.
So by using that indicator, that is Bollinger Bandwidth, we can we can neglect the trade.
Correct.
Or we can, yeah.
Sideways market you can avoid.
For that period, you need to check for 10 minutes, no, sir? 10.
15 minutes is what I normally use here. Okay, here it has been a sideways market. Then the band started expanding around here. Bandwidth started expanding around here.
Yes, sir.
Right. You have to wait for your entry using the Heikenashi method and take the entry.
Yes, sir.
Then you have a good upward ride.
No, in Bollinger width, you changed that 50 to 10, no, sir? What is that one, sir?
No, that is the moving average I applied on the Bollinger bandwidth.
Okay.
Instead of 50 period moving average, I said 10 period is enough.
Enough.
Yeah.
And type is simple only.
Type is simple. Sorry, my wife came in with a dog. You had actually a pretty neat case of expansion of the Bollinger Band here. So if you had caught it on the previous previous day Heikenashi,
Still you will be having more profitable.
Slightly more profit, not much. 30, 40 rupees extra you would have got.
Yeah.
And here you see the market went sideways.
Again, there will be.
Then the expansion came a bit late, if you see here. And here if you see, you're still not out of the sideways market. You need this to cross.
Yes, sir.
for you to get another trending move. If it doesn't cross and goes down again, then you're going to be in sideways market again.
Okay.
Anyway, these are just facilitators for your trade. You don't have to, you never trade on the basis of an indicator.
That's it. That's it.
You trade on the basis of price. If you
Right,
want to
sir.
look at the indicator, you look at it for confirmation. Kapil Kumar, how to decide buying? Okay. Kapil, I just mentioned, I don't know if you were here. I just mentioned that you look at your India VIX and if the price is below if VIX is below the super trend, then you go for a buy. If it is above this super trend, you go for a sell. Will that answer your question? Okay. In
Sir,
a
can I?
daily,
Sir?
one second, let me finish with Kapil. Kapil, in a daily candle method, your crucial decision is whether to buy a C or P, right? So there are many ways of identifying your bias. One is put a moving average on your chart and say that price is up above the moving average, I buy, right? Let's say I take a 20-day moving average. Then I know that I'm in an uptrend as of now. So my bias should be up. So I should be buying C. This is one way. You can use any indicator for that matter. If you want to use, let's say, super trend. I don't know why super trend has got stuck in my mind. Super trend is also showing a buy signal here. So you're in an uptrend, buy C. Then of course you have the Bollinger Band, which is nothing but a 20 period moving average with two bands above that, above and below. So this 20 period moving average is again pointing upward, sloping upward. You're in a buy trend. Then the final one is using India VIX, because somebody asked me the question today about India VIX and how to use it. So we don't know for sure whether VIX is trending up or down. But what we do know is that if you put a super trend on it, or any other indicator for that matter, you will know whether you should be buying or selling your market. When VIX is going down, market will go up. When VIX is going up, market will go down. These are the two simple principles. Sorry. So as of Friday, VIX was going down and it continued to be only on the downward bias. It did not try to penetrate your super trend line and go upward. As things stand now, market is at a bullish trajectory. So you will buy a C. I don't use the VIX for anything, but you can use it for establishing your market direction if you want. And more often than not, you may be right, because going from whatever we looked at over the last so many days, we found that it does match what the market is doing. Like this is on 4th May. Market was down. In the initial stages, market went up and then it came down because the VIX started going above the super trend. It's a very simplistic assumption, that's all. Time frame is 15 minutes. Since you are looking at your 15-minute chart for your trades, VIX can be a good correlation. Commodity was not discussed, Nikhil. For some reason, Swaminathan is not willing to open his mouth today. Swaminathan is the person to talk about commodities, not me.
Sir, what was to discuss about commodity? I don't know.
No, they wanted to know what is capital required, what is the lot size.
Oh,
Everything about commodities they want to know.
okay. I can sir post the link about every details of how much capital required for one lot of each and every commodity and how the profit is calculated in commodity for each and every commodity.
Best
I can post that.
post it in the group, no, so that everybody will benefit.
Yes, sir.
Yeah.
Sir?
Yeah.
$0 is not allowing long OTM. Whether what about looking about Asta trade, sir?
Asta is allowing me. I have tried up to 2,000 points away. It is working for me.
Okay. So how about the broker, sir? We can go. No, how about the broker? All the service, everything is good, sir.
Yeah, I don't need any service. I need to place order and exit. No.
Okay, that is it. Okay.
That is good.
Okay.
I've been using Asta Trade for quite a long time now. I've been happy.
Happy. Thank you, sir.
Sir, I have one question. I know you are trading daily method, but still are you using Heikenashi, vanilla method?
No, normal candle.
Why?
I use only the normal candle. Heikenashi is basically only to establish a trend.
Okay. So these days you are not taking any trades on the Heikenashi?
I'm not taking those trades. Sometimes what I do is if my daily method is going wrong, then I may decide to go into the 15-minute Heikenashi method and take one more trade.
Okay.
And last 14 days anyway, I have not been in a mood to trade. So nothing much.
Yeah, naturally.
I didn't do anything much.
Okay. So you only trade Heikenashi if your daily candle, your bias goes wrong.
If it
Then
goes wrong,
you
I try
switch
to make some profit out of my 15-minute method so that my loss will be minimized. That's all.
Okay. Okay. Thank you, sir.
Yeah.
Hello, sir. Am I audible, sir?
Yeah, you are very audible.
Sir, good evening, Swami, sir. I am Colonel Suresh. I am an army officer.
Okay.
I have been attending your webinars and on listening mode.
Mm-hmm.
And one of my friend had introduced me to this group.
Mm-hmm.
And I've been finding it quite interesting, although I have not started trading yet.
Okay. What's holding you back?
Maybe fear, sir. Because I started trading last year in August. And within 1 week, I lost about 4 lakh rupees.
Oh, shucks.
So after that, that fear has been holding me back.
Mm-hmm.
So I think this is the 4th webinar that I am attending of yours.
Okay.
Unfortunately, I'm always late at seeing the link.
Mm-hmm.
So I always join late, sir.
Okay. I saw that you joined late, but since you attended the previous webinars, there's nothing new here.
So,
We are only going through the same things again.
so
But it hurts to know that you have lost 4 lakhs.
yes, sir.
And you need to trade to make that money back, no?
Yes, I will. I've been paper trading on the concepts of yours.
Okay.
And I've gained a good amount of confidence by now.
Okay, great.
I think I will start trading by next week again.
Yeah.
I don't know, sir, whether this probably is not the holy grail, but if something is closest to it, then I think this one is it, the closest to the holy grail.
I think so too. Because only after this method, I started making money consistently.
So,
And initially I was too foolish to be afraid, so I traded huge lots.
so,
I saw big money rolling in, so I said, this is what is going to be the ultimate for me.
yes, sir.
Then of course I scaled down on my operations, and I said I will have a plan to make X amount per day, and I stick to only that many lot sizes.
So
I don't take big risks. But initial stages I used to go wild because this method was working so beautifully, and during that time actually the market was trending also nicely,
So
like these periods and all. So I saw that there's a chance to make big money.
yes, sir.
I capitalize on that. But now I trade maybe maximum 10, 15 lots. And if I get my options very cheap, then I go for 50, 60 lots.
Okay, sir.
Sorry.
How long have you been trading with this method, sir?
This method is about 5, 6 months now. 5 months, I think. Earlier, I used to trade a similar thing. I used to buy on the break of a previous candle without looking at the Heikenashi. That was not giving me very consistent results. So I switched over to Heikenashi, and then I found that it was giving much more consistency to my profitability.
Okay, sir. Thank you, sir. Thanks a lot for all the guidance.
Welcome, welcome.
Sir, Satish here again. I'm just looking at the messages, but I don't see that pin messages where you mentioned about the webinars.
No, in that you have a PDF file.
Okay.
Which has all the links to the webinar.
Okay. But the PDF, meaning I have to go back to the, you were talking about the Telegram channel, right?
Yeah, Telegram channel.
Mm-hmm.
There's something called 4th May update.
Oh, that I have to search.
PDF file, which contains the link to all the videos.
Sir, if anyone has, can you repost it, sir?
If anyone has?
Can you repost it again today? So you can find it easily.
I got, sir. 4th May updated HA price action PDF.
Correct.
Thank you, sir.
Yeah.
Sir, some gentleman asked about the PDF. So if you go to the group and below, just put there's a pinned messages. If you keep on clicking the first message, that first message is the PDF.
Yeah.
Just below the group, you will find a strip for pinned messages.
Yeah, that's right.
Just one question, sir. Sir, I'm being in software industry, so most of the day I start, let's say 10 o'clock. I starts and it goes till around 9. Usually this is work from home, right?
Okay.
So, new working style. So in that, let's say if I want to take a trade, I'm going to say sometimes, let's say even we put stop loss and all that, but sometimes it's very difficult to, go again and check the market. That's because sometimes we are in calls, sometimes we are in meetings, sometimes we are to the team. You understand, right? Or it's, so in that case, what sort of trade would be suitable? Just a simple guide. Because see, I'm doing investment for last 15 years. Mostly long when I say when I have in portfolio some 5 years old stock also, which gave me 20 multiples, that is multiples. And some are 30% and 40% are also there. I mean short. When I say short, for me short is around 2 to 3 years. So that kind of but if I, let's say, want to play swing, let's say for a month, 2 months or 6 months, could be suitable for our kind of portfolio, I'm saying in my profile.
You see, if you want to play swing, you have to accept the fact that you're making less returns. Okay. I don't think you can make more than maybe 20% in a swing trading. And that too holding the trade for how much? Maybe a month or two. Is it good enough return for you? That is something which only you can decide, no?
Correct, right.
Now, when I talk about this 15-minute Heikenashi method, I've seen it giving me returns of minimum 50 to max maybe 400, 500% on a day.
On a day, okay.
Okay. So this is a choice you need to make. I have nothing else to do. I sit and only think and dream about trading. So what I do is I just keep trading day in and day out.
Right. Now, when my question is simple, that let's say I have a 45 minutes of window, that is a free window, meaning till take. In that 45 minutes of window, can we take a trade? Let's say, is it possible?
It is possible. What you could do is probably set a price alert, and then you look at your chart and place a trade and then walk away.
Okay.
Use the same Heikenashi method to take the trade, but instead of staring at your chart throughout the day, just close your computer and walk away.
Okay.
Swami sir?
So maybe it's a hit or maybe it's a SL.
Yeah. SL is so small anyway, no?
Right.
Heikenashi method. So you don't need to be too concerned about it.
Okay, got it. Got it, sir. Thank you.
Yeah, thank you. Ravinder, you were saying something?
Hello. Yes, sir. Sorry for interrupting. Sir, I was thinking if you are going to tell any new thing, then I will just hang on. Otherwise, I have to go somewhere.
Oh, you can carry on, Ravinder.
Okay, sir. Thank you. Thank you, everyone.
Thank you so much. Prashant, when I faced drawdowns initially, how did I manage my trades? Okay, I started with a 5,000 rupee capital. Okay, and my first 3 days I faced a loss. My capital came down to 2,000. The only thing I did to manage my trade was, at the time I was only trading daily candle method on stocks. So I had a set of some 5 stocks which I used to focus on. And they used to give me a movement of about 10 to 15 rupees per day. So, and in those days, Zerodha was giving you a good leverage on your trades. They used to give me 28x margin. Those were the good old days. So I was able to manage my trades with even my losses. What happens is when you have a loss, you automatically don't have enough money to trade a big position size the next day. So essentially your money management problem is solved because you can only trade lower quantity. I persisted with the same method. So those days actually the market was trending quite well, and I was fortunate enough to kind of make good money on this daily candle method, only using stocks. My mantra was leverage and compounding. Broker's money plus my own money compounded was what was multiplying my profits. Biggest loss with this method was sometimes, you lose about 2,000. Next day you get it back. It varied actually. As your position size becomes higher, then your loss also becomes bigger. My biggest loss was about 3,47,000.
Sounds scary, sir.
No, that was part of my trading plan. No, so it was not scary.
Okay, sir. Okay.
And typically,
So
when you trade this daily candle method, for stocks especially, let me just put it up on screen. I used to trade this Century Textile stock. And this I'm talking about far back in the day. So I had to go back very far. This was kind of moving almost what those days the price was also very high. 50-60 rupees movement in a day. And Zerodha was giving me like 28 times margin. So I was able to trade these stocks. And with high volumes, as my capital was building up, I used to keep on doubling up my volumes, which is probably not a very great thing to do. But luckily for me, it worked. Because at that time, the market was anyway going up, and as they say, a rising tide will lift all the boats. It was like that. So continuously I had big profit days. So the big loss days didn't matter much to me. And slowly I started compounding my profits and realized that if at all I lose big amount also, it is going out of the profit only and not my capital. And I used to have some 3 layers of capital ready. My first trading capital was 5,000, and I had a backup capital of another 25,000, and one more super backup kind of thing, which was 1 lakh. That was the maximum I was willing to lose on any of my trades. If I lost everything, then I wouldn't have continued with my trading efforts. That was the way I looked at the entire trading business. Thankfully, that 5,000 became 65 lakhs in about 1.5 years. And after that, it was all, there was no looking back, as they say. So I used to have that kind of a base capital anyways. I could afford to lose also. Sorry.
Sir, as somebody who's new to this method, do you suggest paper trades or starting with one lot? Or what is your suggestion? Okay, sir. Okay.
You decide this is the maximum I'm willing to lose in a day, and start with 1 lot. Paper trade is also fine, but unless you get the real taste of trading with actual money, you won't get the emotions that go with the trade. And that is where you tend to learn what emotions you should control and what emotions you should be able to handle on your own. And very clearly the position sizing is important. So what I do nowadays is for every 10,000 rupee capital, I only trade 1 lot. Clear, no, Abhi?
So thank you, sir. Thanks, sir.
Stock options, I don't have any advice, Prashant, because it depends on the lot size of a particular stock. And when I traded stock options, like I was trading it with Asta Trade, who was giving me 3x leverage. So I had to spend only 1/3 of the money as my margin. So for me, stock options was also profitable. I really don't have any great advice for you on stock option, how many lots you should trade. That depends on your risk profile. It depends on your amount of capital available.